welcome to today's report, the 30th of July, right? So we have one more day before the month ends for July and we move into the month of August. Interesting. So today I'll talk about market movers ahead. The big earnings week this week from Microsoft, Meta, Apple, and Amazon. Now, this is a very important week for the market as earnings report from some of the largest and most influential companies in the world are set to be released, right? Now, the results from these industry giants have the potential to move the market significantly, whether it's in response to strong growth, disappointing results, or future guidance. Okay, we've been hearing a lot of this word future guidance a lot lately, right? Now, investors, analysts, and traders alike will be closely watching the earnings report from the four, Microsoft, Meta, Apple, Amazon, as each of these companies plays a critical role in shaping the broader market and the future of tech stocks. Now, the earnings of these companies will also offer a glimpse into broader market trends and provide valuable insights into consumer behavior, technological advancements, and global economic conditions. So the first one, Microsoft, that will be today, July 30th, 2025. The time of the announcement is after market close, right? So the expectations Microsoft transition towards cloud computing and AI continues to be a major focus for investors. Analysts are particularly bullish on Azure's growth and the company's deepening investments in AI solutions, which have the potential to drive significant revenue growth. Now, Microsoft diversification across both software and cloud services provide a solid foundation for continued success. Now, key metrics to watch include the performance of Azure, Office 365, and LinkedIn. Now, additionally, investors will be eager to hear more about the company's progress in integrating AI into its products, particularly with the growth of its generative AI solutions. One potential concern is Microsoft's high valuation as it trades at a premium. A strong earnings report coupled with positive guidance could ease investors' concerns and provide the stock with momentum. However, any slowdown in Azure's growth or disappointment in AI adoption could cause some pullback in the stock price. Okay. As for Meta, earnings date today as well, time of announcement after market closes. So expectations, Meta's earnings report is expected to show continued growth in its advertising business, particularly driven by advancement in AI-powered ad optimization. Now, the company has been successful in expanding its user base, right? With daily active users reaching 3.4 billion, not a small feat. Now, analysts are optimistic about Meta's revenue growth, especially with its new focus on AI and its push into virtual reality. However, there are concerns about its valuation as the company's price-to-earnings ratio is relatively high compared to some of its peers in the tech space. Now, investors would like to see how well Meta is managing competition, especially from platforms like TikTok. One of the key areas to focus on will be Meta's revenue growth rate and whether its advertising platform can maintain the strong growth trajectory it has experienced in recent quarters. Additionally, Meta's push into VR and metaverse will be critical area to watch as it represents a major part of company's long-term strategy. Next is Apple. Earnings date July 31st, time of announcement after market closes. Expectations, Apple's earnings report will be scrutinized for updates on iPhone sales, which remain the cornerstone of its business. However, the company's growth in its service segment, including Apple Music, Apple TV, and iCloud, has become increasingly important. While services are growing, analysts have noted that the pace of growth is slowing with year-over-year service revenue growth tapering to about 12%. Now, Apple's high valuation also makes it a concern for growth investors, especially as the companies face challenges such as increased competition in smartphones and the slowing innovation cycle of its hardware. Now, one area where investors are particularly focused is Apple's foray into AI, particularly in its integration into iPhones and other products. However, the rollout of AI feature has not been as robust as expected, and there are concerns that Apple may be falling in behind in AI innovation and the what they call compared to its competitors. Apple's earnings are expected to show stable revenue growth, but investors will be eager to hear about the company's plan to address these challenges moving forward. Okay. Now, one thing about the Apple, right, is that it depends very much on the sales of its iPhone. Now, this is also something that is of concern because notice that the momentum of iPhone, especially when it's able to break into the AI and not integrate AI as part of its features, that is always being questioned, you know. So this is something that if the company addresses it this time around, then it's a really, really good thing. If not, you know, there is some risk for Apple. Next is Amazon. Now, the earnings date is July 31st, time announcement after market close. Now, expectations for Amazon is expected to report strong earnings driven by its cloud business. Amazon Web Services, which is seeing continued growth, particularly in its AI-driven solutions. Now, the Amazon Web Services is expected to show a solid 17 to 18% year-year growth, a figure that will be closely watched by investors. Now, another key area, right? The company's continued investment in robotics and AI to automate its logistic network will also be an area of interest. Now, Amazon has been ramping up its capabilities in AI and robotics, which could further improve its cost efficiency and scalability. However, Amazon's profit margins are often pressured by its low margin e-commerce business, and investors will be keen to hear about improvements in this area. Additionally, investors will be looking for updates on Amazon's push into humanoid robotics, which could represent a major long-term growth opportunity. Overall, Amazon remains a strong growth story, but investors will be watching for any signs of slowing growth in its core e-commerce business. Okay, so these are the main four tech companies that's definitely its earnings is going to move market. So be on the watch out for that. And not only that, it will set the tone for the rest of the other companies. How is it going to be? We want to know. Now, most important thing is that at the end of this earning cycle, right, we need to see how many companies are actually making. uh, what about the scale of the earnings? Is it growing or is it tapering? Now, these are very, very important signs for us to know how tariff has actually affected these earnings. Okay, and it gives us a sign, not now, but down the road. How should we deal with the market later on? If earnings are showing signs of slowing down, that would almost certainly lead to the labor market and so on. And given that, if this thing is an ongoing thing and expected ongoing, we could move into a recession as well. Not this year, probably in 2026. So these are the things very, very important, the subtle signs. Because as you know, Warren Buffett, Berkshire Hathaway, his company is basically, I think, 30% in cash already. So we need to understand why they're doing that. These are some signs. And then are these companies, are they continue going to grow or not? So get all these clues from this earnings season, and from there we will study and see. Okay, so that's the report for today.